All right. Hey, everybody. I'm glad you could join me, those very few that are sitting in front of your computer. So, yeah, I was just going through my stuff, and I wanted to just kind of want to update everything as you hopefully you know, but if you don't, you will now. I'm leaving for Eastern Europe. My one of my sons lives over in Poland with his lovely wife, and so we're going over there to hang with him for Christmas and through the holidays, as well as Estonia, which is, as I understand it, like absolutely gorgeous in the summer. But I guess they got a lot of Christmassy stuff over there and all that jazz. So that's where we're going. And the main reason I'm going ain't to see Eastern Europe, it's to see my son. So anyway, that's what I'm doing. Scott has it from the rest of the for the rest of the year. I'll be back. I think a day or two before the end of the year. So if I'm in sync with the market, which I probably will be because I'm a junkie that way, then I'll probably pop in on the 30th or maybe the 31st, something like that. So, and then also I've been getting contacted by Fox News lately, Fox Business News. Nobody wants me to be on Gutfeld. To assess my willingness or my desire, whatever, to get back on TV with Charles. So I'll be doing that next year as well, starting in January. I think it was actually maybe today, but then not, which is totally fine with me. They won't let me go on like this. So anyway, I'll get to it here. So this is where we are. I just kind of have a little wrap up here. I'm just going to go through through our active trades, and I actually have another video that I'm going to record. I don't know. We'll see how it goes. Maybe I might just go right into it here on gold. So this may be a really long one. It just kind of depends if I start hacking or not. So I'm going to go ahead and share my screen, and we've got Q&A. If you have any comments, let's see, screen two. Okay. Good. Anyway, if you have any comments or any questions, I'm going to try to keep this though pretty tight. Okay, so this is kind of where we are, as I mentioned last time, that December is typically one of the strongest months. Frankly, we're not really seeing that now, but we'll get to the charts in a sec. This Santa Claus rally is the last 5 trading days. I could be wrong, but I don't really see that coming either. I don't know if Santa's going to be sitting on the top of the chimney taking a dump. I actually have a sweatshirt that shows that. It always gets a lot of comments, but I don't see any real catalyst. But we'll see what happens. So, but it is historically pretty positive, but you got to just remember that we've got light volume, and there's this issue, and this is just a typical of a December seasonal rally, is that optimism often helps the bulls. I would emphasize the term often because I guess you could say there's optimism, but I don't really know what that is. I don't see a lot of pessimism out there. I mean, there's a lot of political crap, but that's not my deal. But with respect to markets, there's there's this sense, and I think it's rightly so, that AI has kind of been, everybody's getting all lathered up about AI and all that jazz. And so that's been really, really buoying the market. Everybody's, hey, Oracle's doing this and that. They're not. But, and so that's really brought stocks so high. And now that the bloom's coming off the rose a little bit, let's just say, investors are looking more at valuations. Now, some investors, some market pundits, and I don't mean that in a negative light, but some market commentators and analysts and fund managers have been bitching about valuations for a long time, about how are they going to make money. I just got a notice that my American Express card paid yet again another $20 for Chat GPT. You're not going to make a lot of money, not enough, not as much money as they need charging people $20 a month. And so there's a lot of work that they need to do in order to really, really justify these valuations. I mean, it's just ridiculous what they'll have to do in order to make these companies pretty cheap. But I remember the internet bubble, and valuations were off the charts for years before that bubble burst. So I just want to ride the lightning as long as there's lightning to be ridden. And then I'll make a casual and graceful dismount. We all will, before the bubble really pops. And so I think the jury's kind of out as far as whether that bubble's already popped or not, because a lot of these stocks have come way down. What I think is going on now is people are scratching their heads saying like, okay, have they come down enough to justify valuation, or are they just coming down because the lowest common denominator, and that is the retail investors, are finally not able to buy anymore, and so now it's just a function of profit taking. So there's just a lot of unknowns out there, and I will say this. Excuse me. No, I guess I'll say it now because I don't know of any place else to put it in my presentation here. I As time goes on and I get more and more anecdotal evidence, I think that AI is going to be brutally bad for the economy and for the jobs market. Now, that's not exactly a cutting edge opinion. There are two schools of thought. One is the eternal optimist that says like, oh my God, it's going to be great. It's going to be great. The economy is going to be awesome. Then there's the others that are going like, well, hang on just a sec. Let me look at this. I'm running a company and I can pay these employees a lot of money and hear them bitch about workers' rights and their life balance and how they're not getting paid enough because they have a wonderful college degree from the University of Political Indoctrination, and deal with sick leave and maternity leaves and all the other stuff that goes on with employees. And I'm generalizing here, but the generalization is frickin' well deserved, to be perfectly candid with you. So I could do that and pay a bunch of money, or I could just incorporate AI technology and hire a few people to kind of run all the AI stuff and put a lot more money into the bottom line. Now, by the way, Andy Whitepath over on Option Market Mentor, he's been talking to me about this for a couple of years. He's in in Microsoft's AI division. He manages teams of developers, and he said for a while, we're literally programming ourselves out of a job. And so the point is, and this is actually good for us, but like I said, in my mind, it's kind of bad for a lot of individuals, like millions and millions of individuals. But with respect to companies, if they have fewer employee cost is huge for any company. But if they have fewer employees, then they're going to bring more revenue down to profits. And so that will be good for us because it's actually bringing valuations down, which is what investors like. They like to buy companies with reasonable valuations. That's GARP, growth at a reasonable price. So that's a good thing. Again, from a societal standpoint, from a cultural standpoint, from an economic standpoint, this is not so good. I'm just saying. Now, some of you who are fairly brain dead, but not completely brain dead, would say, oh yeah, but that's what universal basic income is for. Everybody will have a UBI. Yeah. And so who in the planet is not going to want to get in on that? Everybody will. So you think we have an influx of newcomers now? Wait till there's a development where everybody suddenly has a right to a universal basic income. There will be so many people flooding into this country that it could endanger the planet because the planet will be weighted to one side so heavily that the Earth just could go off its axis. I'm exaggerating, but I hope you get the point. And again, what I'm talking about here has nothing to do with politics. It just has to do with logic. So where are we again? I'll get back to this presentation. I think we're coming into the golden age for investing for the stock market. I am really bullish on 2026. 2027, I don't think anybody can credibly look out that far. And everybody will have a prognostication, but when it turns out to be wrong, they just hope you forget what it was, or they'll come out with a new one. So the point that I'm making is that we really have to be bifurcated in general in where we put our attention. And in this venue, we really want to put our attention to just to making money. And I know sometimes I editorialize, which pleases half of you, exasperates the other half of you. But I just do what I do. And I try to focus on logic rather than some stupid ideology, which with respect to a lot of things, I have none. It's just logic. So anyway, back on track here. So you're not going to see, I don't think we're going to see a huge exodus from stocks through the end of the year because nobody wants to pay taxes. So the issue is we've already kind of got this priced in performance dynamic. And so there are a lot of funds chasing performance, but then there's a lot that are also locking in year-end gains. So it kind of goes back and forth. But we're at the highs. The air, as I say, and I mentioned this on Monday, the air is thinner at these high altitudes, but be mindful, it's hard to go higher in thinner air. That's what I'm talking about. And so without aggressive buying, which we are not seeing, I think stocks are going to struggle. Also, I don't know what the catalyst will be. I don't see any geopolitical catalyst. And pardon me, I'm chewing ice. And if there is um, like, let's say there's some kind of uh, end or agreement or whatever to the end of the Russia-Ukrainian war, I think that the optimism that that would generate would be an intraday blip because I other than a few innocents, I don't see there being this agreement where what's his name, the midget, Zelensky, sits down with Putin, the thug, and they sign an agreement, and then, okay, it's done. This is going to be a long time coming. The only reason I'm mentioning that is because I don't see that being a catalyst. And also, so these major indexes are breaking their support. Be mindful of this, and I'll show you a couple charts in a second. Outperformance in a weak market, outperformance is just less bad. Okay, well, if you're managing a really big portfolio, you have to just go to less bad. You can't just dump everything and say, well, nothing's going up. So you have a different problem. But people that are pretty nimble, that are just trying to make money, being in stuff that's less bad is still bad. And so while I say this is the season for giving, don't be Santa Claus, be Scrooge. Okay, don't let other people make money on your bad decisions. And also, here's the thing, you're here with me right now. You're working, you're looking at stocks, you're looking at the market. That's work. And the way I see it is if you're going to be working, then make sure you get paid. That's it. To me, that's pretty foundational. Make sure you get paid. Now, one thing about that, if you're brand new to trading, I'll use this analogy, which I've used several times throughout the years. I was listening to an interview of Huey Lewis one time, probably 15 years ago or more, and he almost 20 years ago. Hell, maybe it was more than 20 years ago. It was a long time ago. And he was talking about playing in a pro-am one time, and he was really frustrated with the way he was playing. He shanked a shot and got pissed off and just kind of threw his club. And the pro looked at him and said, "What's going on? What's wrong?" And he goes, "Oh man, I'm just so frustrated. I'm mad. I can't believe how bad I'm playing." And the pro just looked at him and he said, "You're not good enough to get mad." And his point was, of course you're playing crappy. You haven't been spending hours and days and weeks and months and years on the golf course like I've been. So get a flipping grip, grab your club, see if you can keep it on the green, meaning the grass. So that's my kind of point with you. If you're new to trading, you're not good enough to make a crap load of money. You're just not. That doesn't mean that you can't be. In fact, I don't believe that traders are born. I think they're made. Some people have better aptitude for it than others, but a lot of really, really smart people really, really struggle at trading. Others that are just kind of like average cognitive abilities will actually do pretty well because they're rule followers. And so if you're new to trading and you're struggling, just make sure you're following the rules. And if you don't know what they are, ask. That's what these sessions are for. That's what the trading room's for. So you can do it. You can totally do it in 2026. Just have faith in yourself and have faith in your ability, your willingness, and your consistency in following the rules. I had some dude, he's no longer a member for reasons that will become apparent in just a minute or so. I had some dude email me a while back. He was trying to grind me on the subscription amount that he was paying. And that didn't work out too well because, hey, if you're going to work hard, make sure you get paid. That's me too. But anyway, he was saying like, "I don't know how I did it, but I lost all my money. I lost all my money, and now I'm just down to Social Security. I don't have any assets. I only have Social Security, but I really love the trading room. So, could you reduce my membership?" And he actually pursued it several times. Like the first time I just go, "Karen, can you handle this guy?" And then he insisted. And so I finally got on with him and I basically gave the pros answer. Like the guy said to Huey in a nutshell, you're not good enough. You're not good enough to get mad. If you don't have any money, I don't want you on the website. I literally don't. And I'll tell you why, because we see this from time to time, and I don't want it to be you. This is a rule breaker. You don't honor your stops, or you don't set a stop, and then so you start losing money, and then you're afraid of losing because Dan always says, you got to take your losses, but don't take big losses and all that. And you don't know the difference between a big and a little one. You just say like, "I don't want to take a loss. So this stock goes down," and you don't sell because, oh, that would be a loss. And it goes down further and further and further until you literally can't afford to take a loss. "Oh my gosh, my stock's down 50%. I can't afford to sell now." Okay, why? Because you think it's going to go up 100% from where it is now, which is what it would need to do in order for you to get your money back. Like that's not magical thinking, that's stupidly magical thinking, but people do that. Okay, don't do that. And the way you completely avoid doing that is set a reasonable stop where if you get stopped out, it's okay. I mean, I'd prefer not to take a loss on any trade, but it's called trading. It's not called winning. And so you have to accept losses. And I want you to really, you got to just understand that. And if you accept small losses and you have a good trading strategy, again, if you accept small losses, you kind of can't help but make money. And I mean that, like, it's if you're taking small losses and you have a strategy, a good strategy, that gets you in the right stocks, meaning just stocks that institutions are buying, you're following the rule of taking small and modest losses will not give you, it will give you a very low percentage loss in your portfolio, which can easily be overcome by the percentage gains in your account. It's literally just math. Okay, so I hope that makes sense to you. Oh, and also one other thing. If you find yourself if you find yourself in the trading room asking for trading ideas for stocks that are going to go up a lot, like does anybody have a stock that they think is really, really going to go a lot, that it's going to make really, really big gains? Then the only reason you're asking that question is because you're in trouble, because you've violated that rule. You've taken a big loss or big losses, and now you're just kind of looking for the magic. You're looking for a lottery ticket that's going to get you out of the jam that you got yourself in. And you don't want to do that. You have to take responsibility for what you did, and then you have to own where you are right now. And you're kind of starting again. Think about it this way, like 2026, we start over on January 2nd. And so wherever your account is right now, or I should say on January 2nd, wherever it is then, that's when the starting gun goes off and you start again. If you made a bunch of money this year, awesome. I don't care. You don't care. You start over on the 2nd. If you lost a bunch of money, sorry, that's trading. I've done it. I blew up twice in my trading career early on, twice. And the second time felt way worse than the first time because the first time I had like this dummy feeling as well as losing my money and being on somebody's couch. But then the second time I had that same feeling compounded by this feeling that I can't learn. I couldn't learn. I didn't learn my lesson. What a knucklehead. Does this make sense to you guys? Like, is anybody kind of getting, and it's really okay. Are you getting a little sense of, yeah, that's me too? It happens. It happens. So what we have to do is we have to just accept where we are and strive to do better. Okay. So on Monday, the fear greed index was at 43. Today, it's at 42. Like last week, though, it was actually neutral. And this had not last week, but this was yesterday, so it would be on Monday. So this is neutral. This is kind of right where we would expect it to be through the end of the year. I don't think you're going to get over to greed here. It's not going to happen. But this is really what's going on here. This is a comparison. The black line's the semiconductors. They're all going down here. The spiders, the Qs, the mid caps, and the small caps. All of these are going down. Semiconductors are basically leading the charge. They're neck and neck with what? Purple line, the Qs. So the semiconductors are just absolutely lagging big time. They're the most bad. So we'll say, and then the S&P, I guess you could say, is the least bad, but it's all bad. Now, let's look at this. Let's look at gold. By the way, same chart on all the colors. Okay, the blue, the red, the purple, the green. Same chart there as here. But look at gold. It continues to go up. So this is why we want to be in gold because it's working. It's one of the few stocks that's actually okay. Anyway, it's one of the few sectors that's actually moving higher while everything else is moving down. So, and this is why I said the other day, if you're like an Nvidian, if you're still in that knucklehead universe, get over it. Just move on. Don't just don't fixate on that. It's silly. It's not quite as bad, but it's still pretty bad as the Qualcommians back in 2000. Qualcomm went from like zero to infinity in 15 seconds, it seemed like. I made so much money buying calls on Qualcomm in 1999. It was ridiculous. I was a genius. I was an absolute trading genius because I was making so much money on Qualcomm. Buy a bunch of calls. Qualcomm splits 4 for 1. Now I have 4 times as many calls as I did before. Qualcomm keeps going up. It actually reaches the price, the nominal price where it was before the split. Then it splits again. Now I have 4 times as many as I had before. It's like, let's say I have 10 calls. Then I have 40 calls because it split 4 for 1. Then it splits 4 for 1 again. Now I have 160 calls. And I'm just some knucklehead who first started trading. Okay, this is a total recipe for jumping in to a barrel of gasoline while holding a match. Um, and I got burned big time on that. Why? Because the market told me I was a genius and it was lying to me. So I don't want you guys to fit in. I don't want you to be doing that. We got to just keep our wits about us. This year's been a great year. Let's just wind up on the right side of things and not make silly decisions. So I just want to go through the major indexes and show you here, like the S&P. This is kind of a big move, and I don't know whether. Let's see. I got to put on my glasses here. God, I'm getting old. Yeah, it's basically trading at par with respect to volume, like right about average volume, which for this time of year is actually kind of high. So it's trading at like 5% above average. The Qs are trading at 15% above average volume. Look at this in relation to the 50-day moving average. Guys, do not buy on this dip. Don't buy on this dip. You're buying something that's moving lower. And if you are buying on a dip like this, what you are saying is you're declaring, I know more than the market. I know more. I know that this is going to turn around right now. Don't put your money where your imagination is. It's not going to work out well for you. Now, mid caps, 4 days in a row down. Small caps, 4 days in a row down. They're still above their 50-day moving average, but guys, does it really matter when this is down almost 4% over the last 4 days? This is down almost 3% over the last 4 days. Not a lot, but wouldn't you rather be at zero? Wouldn't you rather not have your money in these things? Like that's what we want to be doing. That's what we want to be doing now is we want to be saying, okay, I have all this money. Some of my money is not in money, it's in stocks. Others, it's just in money. And so I look at my stocks and I say, okay, would I rather have this stock or would I rather have the cash equivalent of that stock? Meaning, would I rather sell that stock, exchange it for cash? You really need to be looking at things in this way, actually kind of always in this way, and deciding whether you want whether you want to be in such and such a position, and it has to do with rules. You have to follow your rules. Okay, so I've got this is my active trade list. Some of these stocks, I actually have Tesla on there. Some of these stocks like used to be on the list, or like Hecla, for example. I said like breaking to a new high, it's hard to buy now. When did I put this in? I put this in on the 11th. I think it probably like had bought it here, or I mean, I was looking at it here, and then I said, I can't really buy it here, but it's still on the list, so I'm still watching. And then, of course, as it turns out, maybe I would have been well advised to buy it, but that's you got to follow your rules. If I just break my rules, which is don't chase a stock that's gone parabolic, then what's the point of having rules? The only time rules are relevant is when you really need them. But anyway, the rest of these, and it's the same thing with Lumentum. I think the way I look at this is it has a pretty good chance, just by looking at the trend, has a pretty good chance of rebounding off the 20-day moving average. But then you look at it on a weekly chart, and this is like a 3-candle reversal, up with a nice close, up higher with the crappy close, and then finally this following week down with the close, at least so far, lower than this one. So it's like up and down. When I look at this, it's not, it's just not where you want to be. So you have to look at this kind of thing and just kind of, just at some point, you just have to say, thank you very much, sir. May I have another? So I'm just going to go through these, and then I'll actually stop the recording. You guys can stick around if you want, and then I'll just run right into this gold strategy, this gold session that I have, kind of giving you my sense of things. So and most of these are gold stocks. You can see over here where they are. So Barrick, just let it run. I'll go ahead and start actually with GLD so you can see. It's right up against this resistance level here. I just have an even number at 400. This is the weekly chart. And I don't expect this right away to bang through this and keep going. I've seen this pattern a lot. Sometimes it does, but a lot of times it just kind of needs a little bit more backing and filling so that this move here is not quite so steep. In other words, it kind of needs more time to get down to where it looks like that. So this could run up. I do think the path of least resistance is up, but I'm just looking at this as like a proxy for all the gold stocks that are working. So Barrick, nothing to do, just let it work. Not really making any money here, 80 cents. CommScope, we got stopped out of that. I just kind of have this because I wanted to mention it. This is a stock that we had a pretty good breakout buy here, comes back and then runs up higher again. And so on this type of thing, you kind of want to be selling here. I kept a stop. I just said, I'll put it at about 1910. And by the way, it's really important for you guys to remember this. When I set these stops, they're really more protective stops to protect against losses and to protect against excessive give back. But I'll typically coach you into like selling into strength. Take some off the table. If something's up way high and you're up 20% or something, take some off the table, because if you're up 20%, then if a stock pulls back 10%, it's, unless you bought it at zero or something, a 10% pullback is not a 10% giveaway of your profits. It could be 90% give back. I mean, it just kind of depends on the percentage for give backs is where you bought and where the stock is right now. That's the frame of reference. This is 100%. And then if the stock pulls back 10% and it's a $300 stock and it pulls back $30, that doesn't help you out. So just be mindful of that. All right. I hope this resonates with you guys. So Franco Nevada, I mentioned the other day that it actually that I took this, I wanted to take this off the list, even though it was still above our entry point, which it was up until it wasn't. But this was the rationale. This is my original note, but this was the rationale. Like this just totally looks like a double top. And I don't want to stick around for that when there's other stocks that are working much better. Okay, GDX, compare this with gold. You see gold's still struggling. GDX pushed higher. The junior gold miners pushing higher as well. Um, and just something to point out. This is the Gold Bugs Index. These are unhedged companies that don't, in other words, they don't basically sell like calls against their stores. They sell calls to lock in profits and make sure they get paid. But the Gold Bugs, they don't do that. They just, it is what it is. And so I always like to look at this as well, even though I haven't put it on the list or whatever. So anyway, so this is working. The triple ETF, we're up slightly on this, but it's kind of a wild ride. Now, GFI, like all these are gold stocks. They're all kind of looking the same. They're just kind of they're consolidating their recent gains, which were many. And then gold, I've already gone over that. Kinross, we're right about great. We're making 9 pennies on this right now. So this is working. Newmont, working just fine. Now this one, NOV, I just left this on because I wanted to point this out. So I'd put this on yesterday and noted that on Monday we were stopped out for just a 5% loss. And so I'm going to go ahead and take that off now. And then Pan America, this is still doing just fine. I'm just leaving the suggested stop there. Rivian, it's a wild ride here, but this is the chart that I'm looking at. I think this works. I think this is gonna work really well. And speaking of which, I want to show you this one chart. I forget. I put it in this morning's note. Yeah, XMTR. Okay, look at this. This is a pretty cool base. Like it's a really, really good base. If I make this logarithmic, you get kind of a different look. But just on an arithmetic standpoint, you can see this is a big turnaround. So I like this. I like this stock. It's just not quite ready for prime time. But ultimately, if it moves up above here, that'd be a pretty good breakout. I have a hard time buying it here for the reasons that I mentioned earlier, which is, you don't really buy something in anticipation that something is going to happen. Instead, you just wait for it to happen, and then you react to that. Okay, so Roivant, I don't know how you pronounce this, is still running higher. We're in at 2150. So we're up about 7.4, 7.3%. This is popping out of a volatility squeeze. At some point, I think you should be taking some profits off the table. If you look at the weekly chart, this says everything. This has run up so much, so fast that at some point you're going to see profit taking. And so the just kind of doing a measured move here. This bottom to top is about $1.50, about 7%. So if you look at this as resistance here and a breakout, this has already run up $1.75 and 8%. So it's completed a double of, not a double, but a single, basically. In other words, it's run as high as this width was. So still momentum's high. Yesterday, the last several days have had really good volume, and it is notable that on this day where there was a lot of volume. Oh, okay. Well, that's the end. Big volume. No, not so much. It turned out that this was almost kind of a shakeout. So there's still activity here. We've still got an hour and a half to go in the trading day, and this is already at average volume. So I like this stock, but again, don't let your profits slip away on this. Now, Tesla, this came down and hit the stop today. I guess California is suing Tesla, or they're making I live in the dumbest ass state. Well, actually, there are a couple others, but I don't want to offend you people up in Oregon or Michigan or various other parts that I won't mention. But we live in a really stupid state, and so they're going to sue Tesla and take away their toys because of full self-driving or something. So the stock's down. Yesterday, it was up because their cars are driving around Austin with no drivers in them, which is a good thing for Austin. They have a lot of bars there, and so you just have to watch this. But it hit our stop, so I'm taking it off the list. It's a choppy pattern anyway. And then TTI, Tetra Tech is still working okay. Like there's none of these that are just shooting the lights out, guys. But they're holding, and so that's fine. But I'm not inclined to add anything else to the list. So these are other stocks. These are other stocks that I'm watching. Google. I'm just watching this because it's like, how low can you go? It's like limbo here. You shouldn't be in this stock unless it's for a long-term position. Hekla, like I said, I'm still waiting. Lumentum, this is still in a nice uptrend, but I had to take it off the list and honor my stop. So we made good money there. Breadth is about neutral. Taiwan Semi, no, this is why you keep stops. By the way, don't buy the dip, okay? If you want to know if you can buy the dip, don't ask me, ask somebody else. TTM, this is why we use stops, because it fell below the 8, then it fell below the 20, now it's down below the 50. This would be just the kind of stock that would kill some people, that you're in it and then it violates your stop and you don't sell. And pretty soon, and I know this emotion because I've had it, and it really does suck, guys, where you buy a stock like this, it violates your stop, and then pretty soon it's like you can't believe it's going down like this. Okay, well, it's definitely going to bounce. And then it's like this, and you're just frozen. You're just looking at this going like, oh, well, it'll definitely bounce at 60. And by the way, maybe it will. It'll definitely bounce at 60, but that's the same person, meaning you, that was saying it'll definitely bounce at the 50-day moving average, and it didn't. And so, look, when it's time for Elvis to leave the building, then leave the building and go get a peanut butter and nanner sandwich, okay? VIX, not surprising that it's up a little bit today, but still, generally speaking, it's right in the sweet spot where it should be. And then WAGs, Gene DX. This is another one, like we're out of this a long time ago, but this is another one kind of like TTMI, where you're still in the stock for whatever reason. You're probably still in NVIDIA too. And you can't believe that it's gone down like it has. You're just looking at this and you're waiting for the stock to return to its former glory, and there's no former glory in sight. So anyway, so that's what I got for you here. I'll answer a couple questions here. And then I'll take a quick break. You can stick around if you want, but I'm just going to pause the recording, and then I'll start on my on this gold presentation that I had. I want to leave you with something to chew on, and Scott's going to be taking it from here on out. So could you please comment on the M-top formations in the cash, S&P, and NASDAQ? Well, sure. I don't look at this as a double top here. I mean, I get what you're looking at. I've drawn a box around it before, but I think you're looking at like this versus this. And I get it. I just don't look at it that way. This is much more meaningful to me. is the breakdown below the 50, and then this runs up back above the 50, leading a lot of people to say, hey, that was a shakeout, and now we just continue to go higher. Dan said he thought that the S&P would be at 7,000 by the end of the year. So, hey, man, I'm for that. Let me get back in and get that last 3% or something. In this case, I think Dan was ultimately wrong. Of course, his original target was 6,000, and that's a long time ago. But the point is, this is where I think the real meaningful area is, because this comes up and then it fails to hit this level here. So yeah, it is, in the way I'm describing it, it is a double top. But the way I look at it is, this didn't come back to make a new high, which, if this was kind of a bona fide shakeout, that's what you would expect. And so as I look at this, I don't want to say that the trend is over and we're going to go into a bear market or something like that. There's a few different times that you could have said the same thing. This would be one. Probably not really this one too much, but you guys know what I'm saying. So I'm not going to say that. But yeah, this is definitely a bearish move here. I feel like this is kind of a bull trap. Okay. Let's see. For investors who will be away around near end and early January and unable to manage trades closely, what's your preferred approach? Okay, stay in cash. Yeah. Or is there a reasonable way to maintain some exposure in the case of a Santa Claus rally without needing active management? Kind of depends, Fred, on the nature of, like, what are you trying to do then when you say gold index? I get what you're saying. With respect to individual positions, just set a stop. And then you can stay in that position, and you know what your downside is if the market turns over. But with respect to just wanting some exposure, I don't think, you asked this quite a while ago, and I might have already gone into this, but I don't really think you're going to miss anything if you don't have exposure. I would certainly want to be in gold, but here, if this were to turn around and run up, you got 2.5%. It's not gonna allow you to buy a second home, that amount of money. So if it's me, and I'm doing this year, I have virtually no exposure. Because I don't want to be thinking about the market when I should be thinking about my family and my faith. Like, why are we celebrating this holiday? It's not because of the fat dude in the stupid red suit. I want to be focusing on my life. And so it's just the way I feel. Okay. So do you have training videos on your website that teach your strategy rules, etc.? Yeah. I can't answer the whole question. I'm not sure that these videos were removed. Like, the best way to learn my strategies is through that smart trading course that I taught. We got big response to that, and a lot of people got a lot out of it. So that would be the main thing. But yeah, we do have a kind of a fast track thing that I'll be kind of updating this year. And I've got a lot of things that I'm going to be rolling out in January. So I'll just say brace yourselves and buckle up. Okay. And then palladium. Yeah. I mean, it's kind of like the new gold. Like, look at this base. And palladium it's not like speculative like gold, or, oh, it's a hedge against inflation. This is manufacturing industry. But yeah, from this, I mean, the stock's up on just looking at this chart. I don't really see why it can't go up to 180 in the next couple of quarters. I can't make any projections more than that, but it's definitely overbought in a phase one move. Looks to me like it's got some upside momentum from here. Okay. And then any thoughts on yield hogs? No, I really don't, Dave. I haven't been. I haven't even been looking at yields, um, and and frankly, the reason is because yields are pretty low, and so. I mean, I get, and I miss Dana just like everybody else does. But I don't think high yielding stocks are, at least for me, where I want to be focused on. And we have some like municipal bonds, some even in California, and of course that's always a crapshoot. They could go broke at any time, but that's kind of where we put our stuff is in non-taxable munis, stuff like that. Is the Santa Claus rally off the table at this point? Yeah, I think it has. And then is a gold a long-term position or just a trade? Yeah, I think, well, it can be both. I mean, I've had gold for ages, for 20 years. And I haven't added to it. The market's done that for me. So yeah, I would have it as a long-term position, but you could also trade around and 10 versus 15 versus 20%. Really just depends on what your downside risk is. You just always want to, like, you could take 100% position in a stock, and if your stop is 3%, you're going to be okay if you get stopped out. Your account's gone down 3%. A lot of times that'll happen in a day. So it just depends, and I can't give you I can't give you a better answer than that. So Nvidia looks like a head and shoulders top. Yeah, I mean, I think it does. I think it does too. I would want to short this if it comes up to about 180 or so. But right now, 170 is the floor. Like you can see it here. 170 is the floor. So if it falls below 170, you're likely to get a snapback. That's just kind of always the way it is. A break of support sucks in new people, and then as soon as they sell, that's what I'm talking about. The bunch of selling, then buyers come in and go the other way. So. And then thoughts on UPS? Oh, they're busy this time of year. Yeah, it's coming out of a base here. It's above the 200. I don't I don't tend to want to buy stocks that are this choppy, that are down more in the penalty box on the bottom than on the winner circle up here. If you just look back at where the 52-week high was, this is still almost 20% below. But as I look at this, let's see, earnings are in a month and a half or something. I think it has a little bit of upside, but not a lot. I think you could probably do better, but if you do buy this stock, you're probably going to make money. Just keep a stop below the 8-day moving average. That's what I'd say. And then finally, geez, same chart, basically. They look pretty similar. No, I think you're kind of buying this off the bottom. There's a lot of pain here in this chart. I'll say it again on this. If you buy it here, you're probably going to make money. But what you do is if you're buying it here, you'd put a stop just a little bit below today's intraday low, so you're risking about 4.5%. But I wouldn't buy it here. It's just you don't really have an edge. I'll put it that way. Okay, so anyway, that's all I got. That's all I got for you guys here. Oh, one more slide.
Merry Christmas and a prosperous New Year.
There you go. There you go. That's what we got. So I hope you guys enjoyed that. I actually made that myself today. So that's it for my strategy session. But if you want to stick around, I just need to load it and get a drink of water. I'm going to go into a gold presentation, so I'll just leave the webinar open here. But I'm going to stop recording. I'm glad you guys like this. I appreciate you coming on live. Sorry to just kind of do this impromptu, but if it upsets anybody that I just won't do it anymore, it's really okay. So all right, I'll see you in just a second. Okay, I want to just make a few comments about gold here before the end of the year. I think that there's some real interesting changes in the world over the last several years, and I do think it's impacting the way gold is traded. It's kind of a different beast than it has been historically, at least during the times that I've been trading. There's just a lot of other stuff going on, and just to look at a macro view for a minute. I don't think anybody with much of a brain would look at just the global culture, the global evolution of Homo sapiens, um, and say that we're progressing and we're getting more orderly and things like that. It just seems like there's a real devolution in cultures. You know, people are walking around and they're more pissed off. Eat the rich and making big insults to immigrants who are just trying to improve their lives. Like I've said, I'm not a fan of 90 bazillion people rushing the borders to come into the U.S. or Germany or anywhere else. My sense when I first saw that was, well, if these people had uniforms and were carrying guns, wouldn't we be invaded by an army and then aren't we at war? But since they're not, then maybe it's not an invasion. Like I don't really get that, and so that's just been my view of things. And but before you write me off as a racist or something or any other stupid thing that people say to those of us with just kind of common sense, is if I was if I was in another country and I knew that I could get into the U.S., I would be pole vaulting over the fence. So no judgment. I'm just looking at the way things are going, and in our society, in our culture, and certainly domestically, and that is at least in part why I think there is a shift into something of certainty. Like they're not making more gold; they're just mining it, but there's a finite amount of it. It's just not quite like Bitcoin. Like we don't know, we know that there's 21 million Bitcoin. We don't know how much gold is still in the ground. They're still mining it, but it is seen as a store of value, a hedge against inflation, and stuff like that. But I also feel like in times of really kind of a widespread uncertainty, it's gold and precious metals are seen as like, well, and plus, we've got William Devane, talking about Rosalind Capital. They're still the fastest shipping around. Um, there's always that. So I think that's part of a just kind of an asset reallocation in gold. Somebody asked me in the strategy session that whether how much of your account or whatever should be in gold. People are asking that all the time, and so I thought it would be a good time just to kind of lay some things out. And this is simply it's my take on things, and nothing more. It's just my take on things, and so I'll just kind of get right into it. So, why is gold surging? And I look at it as we want to kind of break it down into what's happening below the surface and more in general. I think that gold is kind of being, it's kind of being re-rated structurally. It's not just tactical trade. There's a real structural revaluation here. And so there is some physical delivery issues, like more and more central banks and sovereign nations are wanting the gold, like send it to me. We'll put it in our vaults. So is it physical delivery stress? Again, is it central bank accumulation, or is there macro geopolitics or something else. I look at this and say, it's all of the above. It's kind of like the last line in Trading Places. Would you like lobster or cracked crab? Why can't we have both? And so it's all of these things. I don't really see this as being a short squeeze. I do see it as just being like a repricing of what gold is. It's not really a supply crisis. It's literally a repricing. And you can kind of think about it in this way. The market prices a stock at a certain price based on what its earnings are and various other things, like stock's worth $100. And then the company comes out with some monster earnings. It's made a new discovery and it now has a cure for gravity or something. And then the market goes, holy crap, this $100 price, way underpriced. I think it's worth 150. Okay, so that's just literally a repricing based on all the circumstances that are known about that particular company. Okay. Gold is just the same way. The cool thing is it's a trend and we can follow it. Plenty of gold around. It's just being repriced. We've got banks that are just they're buying and taking delivery hand over fist. And they're not really concerned about the price. They just want the gold because it's really seen as a strategic asset. And they're accumulating this gold because it gives them some stability, it gives them some diversification, and also some independence from these financial systems that they don't control. We'll get into Russia in just a second. But that's really the thing is it's a little bit, I don't know if this analogy really holds, but it's a little bit like crypto, like Bitcoin. All the central bankers and the politicians, all the scumbags that don't like this idea of crypto. Well, why don't they like it? Because they can't frickin' control it. Because I think this has kind of gone away now, but it's anonymous. You can do what you want to do. And then the politicians go, oh, it's used by drug dealers to launder money. Okay, what do you think they were doing before Bitcoin? Were there no drug dealers? Was there no money laundering? Of course. We should just outlaw cash because before crypto, drug dealers had all this cash. They would launder it in just different ways. So crypto just makes things a lot more efficient, and that really pisses off the power-hungry regulators. I scoff at all of them, and I spit on their boots. But that's the way it is. So gold, at least in my world, so gold is truly seen as independence from the central bank scheme, which any central bank, it's a scheme. That's why our central bank, we can just buy bonds anytime we want. Well, what are you buying them with? Oh, just entries in the ledger. We just buy them. That's it. Create money. So what this kind of revaluing means is, and the central banks acquiring, this is the cool thing. It creates, in my view anyway, like a long-term floor, like demand. That's why we look at charts. You go like, okay, where's the current floor? If the stock comes down to a certain level, is it going to rebound? Where do I think it's going to rebound? So with what the central banks are doing in these sovereign nations, when they're accumulating gold, and they're not really price sensitive per se, they just want it. That's going to create a floor. And it also explains why gold is so resilient. Look, if you have a good floor, that's a definition of resilience. All right. So when they take physical delivery, literally back the trucks up, put it on the freighter, and deliver it to wherever it is they're delivering, that supports confidence. I have physical gold. I don't own any GLD. All my gold is physical. I'm pretty confident in that. Nobody's going to take my gold. So just expand that to the world. So But the main accelerator for gold isn't just people wanting to take physical delivery. We've got these real rate expectations. If the macro conditions are going higher and there's higher rates, they're setting higher rates, gold is going to come up and chase those higher rates. If on the other hand, we see a lot of inflation, and inflation and rates tend to be the same way. But if we see inflation in a low rate environment, well, guess what? Gold's going to go up that way too. So whether it's interest rates like an increase in the cost of money, or whether it's inflation, an increase in the cost of goods, either way, gold's going to benefit. Now, just be mindful of this. The charts are the charts, and you're going to see the ebb and flow. They still trade the same way as any other stock. It's just that at least you have an understanding of how of the underlying dynamics of the chart. And with respect to gold itself, in our case, like GLD, with respect to gold, it is very much like cryptocurrency in this way. Gold does not have quarterly earnings reports. Now, gold miners do, but the metal itself does not have quarterly earnings reports. That's why in the futures market, you can kind of trade it 24/7. There's no news catalyst on that. It's just all underlying dynamics that kind of underpin the price. And so, but what's really happening with all this uncertainty throughout the globe, again, people are going like, well, I just want gold. Like I look at the dollar bill, and yeah, we're the world's reserve currency. Great, good for us. It's not always going to be that case. It's never been that case in history. Like Japan's dumping all their bonds, not because they're pissed off at us, just because they need the money for something else. China has a boatload of our bonds. They can crush our economy in a heartbeat. It would be kind of mutually assured destruction, but they could crush it in a heartbeat. They could just sell everything too, and interest rates would go up to 9,000. I'm exaggerating, but the point is, our whole currency-based system, our whole monetary system is in a real state of danger right now. And be mindful of this too. I'm not rendering an opinion on anything other than how we're going to make money in this. That's it. I don't want to be some sage on high that's pointing to various things in the world and giving you, giving you wisdom. Hell, I don't have wisdom. I'm just thinking about stuff and kind of like parsing facts with the conclusions that I come to. So don't read into this too much. I'm just giving you what I think are the underpinnings of why gold is doing what it's doing. And we could say silver is the same thing. Silver and palladium both. Those are just more for industrial things. There's certainly speculation involved there too. But gold is really, like, gold isn't really used in anything on an industrial scale. It is just more speculative and to be worn on your Actually, this is platinum. Forget that. Anyway, you get the point. So, and we're going to have ETF and future flows into gold, and that just as a function of hedging, that's going to put an increased demand on the physical gold itself too. So all of this stuff is coming, is creating higher prices. Now, this is an interesting thing. Is this Russia asset seizure? There's a lot of talk, and I think ultimately it's going to happen. The ECB, and look, the EU, like, don't even get me started on that. That's the biggest Potemkin village I can imagine. Those people are total losers over there. And if you really want to know what I think, just ask me. It's a bankrupt and a corrupt system over there. And so they're doing whatever they can to maintain some shred of, any little semblance of power that they have. And they don't have much. But what they do have is a lot of Russian assets are deposited in these foreign banks, which are over in Europe, whether they're Italy or wherever else. And so the EU is saying like, hey, we want to we want to disempower Russia and all that for all the different reasons. The obviously the war in Ukraine. And there's a lot of stuff that that kind of underpins the actual reason why that's happening. And it's more than just Putin bad. Putin is bad, but there's a lot more to it than that. And and it's not incumbent on me to tell you what that is. Do your own research. But the leaders over there are they need dough and they need credibility. And one way to do that is to say, okay, well, we're just seizing your assets. But the problem with that is that when they do that, they actually it has the reverse effect than what they want it to have. It actually impacts in a negative way their credibility because suddenly having your money in a foreign bank isn't as safe as it used to be. Reserves are supposed to be politically neutral. Like money doesn't know politics. Money's just money. And so when they start confiscating or truly threatening with a credible threat to confiscate money from a sovereign nation, that puts the whole banking system in question. Because as I say, like your safety ends where disobedience your safety ends where disobedience begins, actually. I should have said begins here. When the powers that be don't like what you're doing, they can humble you. They can take you to your knees by just seizing your assets. And we see that in various other, I mean, you used to see it on Twitter and social media. If they didn't like what you were saying, they just delisted. They took your account away or they demonetized you, stuff like that. So this stuff's been going on. It's been going on for centuries, stuff like that. If people in power don't like what you're saying, they're going to do whatever they can to shut you up. It's the same way now, just on a much broader and deeper and more meaningful scale. But what does that do? Here's the thing. I was just kind of hinting at this. If it happens to Russia, it can happen to anybody. This was my quote, that your safety or confidence ends when your disobedience begins. And so what this means with respect to the banks is it undermines your trust in banks. Like think about even what and I don't remember the exact particulars, but remember when the truckers, I think it was, were on strike and up in Canada. I think it was because of the COVID thing, like they weren't letting people in or they were letting people in. I don't really remember. But what happened was Justin Trudeau, soon to become Mr. Perry, I guess, he decided, okay, well, we're just going to seize your bank accounts. We're going to take all your crap, and then that'll be the end of you. So that's just the way the way it was then is the way it's starting to trend now, only on a much, much grander scale. And so now this counterparty risk includes governments. It's not just the bank. It's not just the person on the other side of your trade. It's not just the seller of collateral default swaps and stuff like that. It's actually governments. Now, with gold, none of this stuff exists. There's no counterparty risk. No bank can freeze it. They can't bring a fire extinguisher into your house or down to the vault in the bank or whatever and freeze your gold. Nobody controls it. You've got control over it. And so the bottom line is this: nobody's going to steal your gold. And that's a major function of why the stocks are doing what they're doing. It's just kind of a little cultural shift in the way people look at it. People that would never have in a million years even thought about investing in gold suddenly the million years are over and now they're investing in gold. And so it does create a real good dynamic for us to be making money. And so these are really what it boils down to is all the sovereign buying, and that's just not just nations, but central banks. And that creates a floor for this. And then the macro flows, all the things that I just talked about are really accelerating or exacerbating the buying. And so what I really want you to be mindful of is they're being repriced as a strategic asset. Gold was never really seen as a strategic asset before. So the view on it is a little bit different. In kind of a weird way, NVIDIA, their GPUs were the big deal with gaming. Like that's the fastest GPUs. The gamers love them. And then suddenly it's like, well, wait a minute. We can use our GPUs in other things too. And so it's almost like they created a separate business without creating a separate business. It just turns out what they had is good for something else too. So in a similar way, I can look at gold this way and just say that people are looking at gold in a different way. No longer is it used just for gaming, it's used for something else. So there's more of a demand there. It's not just a reaction, it's really just kind of being reassessed. That's kind of the way I look at it. And so that's all I got for you guys on this. So I'm looking at a few comments and then that'll be the end of this. I think this has been a very, very long session here. So Ray, thank you. Best wishes to you and your family. Same to you, man. Same to you. I really appreciate your membership. To all of you here, you could go anywhere. You could go get free YouTube videos. I mean, you get what you pay for, but they're free. But you could be getting your information from a lot of different places, and it would be a mistake for you to think for 1 minute that I don't appreciate you. This is not like a huge business. It would be nice if it was, but that was never my intention. I've always thought that I want to focus more on education and helping other people make money than anything else. And one of the things that I actually had, I'll just go ahead and talk about it here if I can bring it up. I actually had a few things that I wanted to mention to you in this regard, and a lot of it is just with respect to my business here, and you're my business, and so I just had a couple things that I wrote down that I thought I just wanted I wanted to relay to you. So one of the things that I think is really important for any trader, and I'll just say it for me, is you want to make trading work for you, not the other way around. When I really made that transition, and I mean that now with respect to my business, because my business is not just personally trading. My business is trading and also helping you trade. When I was just focused on the business, I was a really crappy person to be around. And frankly, sometimes as I look back on it, I'm amazed that Jennifer stuck around because I sure wouldn't. I was a bear to live with because all I gave a crap about was work. But I've kind of made that transition and I'm going like, you know what? Life is worth living, and it's worth a hell of a lot more than just sitting at my computer banging stocks around all day. And so the way I look at it is I think, and I'm not the only one to say this. I actually have heard other people that are far more wise and intelligent than me say this. Think about writing your epitaph now. What goes on your tombstone? You know, I'm not going to have one of those. When I die, my body's probably, I got so many body parts that are man-made, I'll probably just, dissolve into a pile of metal and carbon. But think about what's going to be on your epitaph. Is it going to be like, wow, Dan really worked hard at trading. Dan really made a lot of money at trading. Um, no, you want it to be something meaningful, like because what your epitaph is your statement on your life. It is what you were all about. And so whatever that is, just decide what you are all about. Now, if you say, well, yeah, but I'm all about trading. Okay, that's fine. It's your life, man, not mine. And so maybe you're the type of person, and there are those out there, and I don't judge. I'm just not one of those people. Maybe you're the type of person that just you love trading. That's what you do. You're conquering the unconquerable, which is your own mind, your own issues. But that's what you're devoted to. Okay, well, that's going to be on your epitaph. But if you're not that kind of person, then don't do that. And so to me, I've already written my, I've written what I typically do every year. And that is a document that I review on a regular basis. And its title is simple: What Success in 2026 Looks Like. That's my roadmap for the next year. And it really comes down to this, faith first, like, am I walking in my belief? Now, and I'm a Christian, but that's just my faith. You could be a Muslim, you could be a dedicated atheist, you can have any other religious convictions that are yours, and they are yours. They're not mine. Go for it. My point is, are you walking in your belief? Because what your faith is, and again, I'll say it, being agnostic or atheist is a faith. And it's just as respectable as any other one. In fact, it's more respectable than anything else because it's yours. Okay. Support your belief, whatever your belief is, walk in that belief, because otherwise you're just a walking hypocrite. At least that's the way otherwise I'm just a walking hypocrite. And then also, what's my focus on finance? So I've got faith knocked out. I've got finance. For me, I have business goals and I've got a way to reach them. And by the way, I'm going to be marketing a book. It's almost done. I have my pre-launch team that's going to be reviewing it shortly. And that's going to help business and it's going to help you because you're all going to buy it and it's all going to be super cheap, like really, really cheap. I want you to feel guilty for not getting it. I'm not going to get rich on it. You're going to get rich because it's going to help you stop doing stupid stuff. And then also fitness. I have my goals for fitness. Do you have yours? That could be anything. It could be, I want to bench press 250 pounds. It could be, I want to drop my body fat to X percent. It could be any number of things. But I want to focus on my fitness and feel better a year from now than I do now. And I'm already working in that direction, contrary to what my cough would have you believe. And then, my family is really, really important. And that really involves my relationship and my relationship with my wife, and my kids and my super, super close friends and my dogs too. And there's a difference between, at least as far as my spouse goes, I'm not telling you how to live. I don't care. But, I know that there's a difference between loving somebody and being in love with somebody. And that somebody, I mean, the way I feel is if somebody loves me, that's great. I get a warm feeling. But if somebody, and I mean my wife, I can see that she is truly in love with me. That's a deeper, more meaningful feeling for me because I love a lot of things, but am I in love with all those things? No. And so the reason I'm saying this is I'm kind of challenging you to look at your significant other, if you have one, look at your significant other and resolve to express your love unique to that person, not just like I'm in love with him or her, so I do the dishes, but really let them know, you really do love them. I'll tell you one thing, you're giving yourself a huge gift there. And then also think about personal things. For me, this is my fun because, again, people that have been around for a while know I have 5 F's: faith, finance, fitness, family, and fun. And for me, it's getting back, like I say, to where I once belonged. And that is music. I haven't played the piano in probably a year because I've just been too busy. Well, that's going to change. It's just going to change, and that's all I'll say. And so these are the things that I'm doing in 2026, and I would just challenge you guys to do something similar. It's your life, live it the way you want. But for me, I want my life to have meaning beyond just trading. There is so much more to life than trading. I mean, I'm glad you're here. And I will say this too. We have a lot more younger people coming in. It's like Gen Z, it's millennials, like all kinds of people are flocking towards trading. And I think in part it is because of what I said really at the beginning of this when I'm talking about AI. And that is that it's more challenging to make money these days. Think about this. It's more challenging to make money. If you're a recent college grad or you have a son or daughter who's a recent college grad, it's really tough to find work in any field, really. My wife just told me we have one of my daughter-in-law's sister works for McKinsey, which is a big consulting firm. They're all supposed to be super smart people and all that jazz. She told me that a boatload of people were laid off from McKinsey recently. And why? What rhymes with why? AI. And so what I'm saying is this idea of like go to college, get a good education, get a good job, buy a house, get a family, and retire comfortably. That crap's out the window. It's just not the way society. It's not the way our culture is anymore. It's not the way our economy is anymore, and that's a shame. However, it is what it is. And so to be sitting there pining away and longing for the good old days, it's if that's how you want to spend your time, like write that on your epitaph too. He was wishing a lot. The most common word that he ever spoke was should. It's a stupid word. It just is what it is. So if you can just accept that things are not the way they used to be, and that's not necessarily a bad thing. It's just a thing. And so with the jobs market changing the way it is. And again, I foresee a big change in the jobs market and not really in a good way. Think about it again from what we're doing here. You're not tuning in here to hear the wisdom of Dan. Trust me, you're not. You're here because you want to make money. So all of these changes that I'm talking about, think about it from the standpoint of the valuation of companies that we are investing in, that we're trading in. And remember, our goal in finding the right stocks are what are the institutions buying? That's what we care about. What are institutions buying? Because institutional buying is the rocket fuel that pushes the rocket higher. And so that's all we really care about is what are institutions doing? So what institutions are doing, we want to do too. We want to buy and then let their buying push things higher. So if valuations are getting cheaper because of they're laying off a bunch of employees and still getting the same work product, that's good for us. Not good for those that are hitting the unemployment line, but it's good for us. Do you guys get what I'm saying? Is this making sense to you? And and one other thing with respect to that too, think about the cultural shift in this way. Housing is so expensive. Like Jen and I could not afford to buy the house that we're in now. No way. No way. Our house is so expensive. We're like real estate rich. We couldn't afford to buy this house now. So, and you can take that all the way down the line to entry level housing. Most people, the younger generation can't really afford to buy houses, but also they're they're not looking, I'm generalizing here, they're not looking at buying a house as their retirement nest egg. They're not. A lot of them just work online. I mean, think about COVID and Zoom. Like everybody's on Zoom. Look at this. When's the last time I've taught an in-person workshop? It's been many, many years ago. I was at the Founders Club thing in Vegas in November, and I'm sure I'll do something in 2026. But people don't do that anymore. And so if I'm sitting on my butt here in Southern California, I can be in Sri Lanka. It's just a different time zone. I can be anywhere I want and still do my job. So I think the younger generation is looking at a house as an anchor. They're not in, they're not doing it. They're renting, they're moving, they're focusing on more of a lifestyle. And so I think that all the rules that we all grew up with and that we've all learned, you got to be questioning all of those, all of them, because they don't apply. Sometimes you'll get the sense, well, sometimes they do. Oh yeah, this one does still apply. Maybe, but maybe it's just coincidence. And there's a difference between correlation and causation. So anyway, that's just what I think. So, guys, I see a lot of your kind words here, and I really I really appreciate it. Ray, you say I've seen the change in you since you got married. Yeah, it's been a big change for me. I'm not as much of a jerk as I used to be. I also I'll kind of leave you with this. I forget who it was. I just heard. I think it was Rob Reiner. I think it was Rob Reiner who said that. So it's what happened to him is so tragic, but I can't say for sure. But what he said or what somebody said was, you don't really learn to be a man until you get married or until you whatever your equivalent of marriage is. You don't, because only then when you have somebody in your life that you truly are taking care of, or watching out for their well-being, whatever. That's what a man really is when you can step up and shoulder some responsibility for someone other than yourself. And that has made a huge difference for me. Like, that old saying, like, hey man, it's not all about you. Okay, well, if somebody were to say that to me for the bulk of my adult life, I'd go, well, yeah, it kind of is. It kind of is. So try to kind of step out of your own selfishness. And we're all selfish to a certain extent. We have to be in order to survive. But yeah, I mean, learn to give to other people, and you'll find that you get as much, if not more, than you give. So anyway, that's all I have to say. And again, Ray, I'm really glad. I'm really glad you've seen a difference, and hopefully it's for the best. So anyway, I'll see you guys. And once again, I truly appreciate you. Appreciate you coming on this, and I appreciate your membership. But I will not, and I will tell you in January, I'm going to be offering something a little bit different to those of you who are really into what we're doing here. We'll put it that way. All right, guys. I'll see you next time.